Hey there, financial enthusiasts! Let's dive into the latest market updates and news that have got us buzzing with excitement, so buckle up and get ready for some thrilling insights. Starting with the stock market, we witnessed the Dow and the S&P 500 snapping their 3-day hot streaks. But what caused this twist? Well, it turns out the central bank released minutes from its last meeting, hinting at more interest rate hikes coming our way despite a temporary pause last month. But hey, amidst all this action, there's a real game changer in town. Meta stock soared in anticipation of the launch of its new Threads app. This Twitter competitor even got the attention of Elon Musk because this is going to be major competition for him. The Threads app went live in the evening, and guess what? Within just 2 hours, it racked up an impressive 2+ million signups, which is an impressive blockbuster start. In other news, new US car sales have surged by a staggering 14% in the first half of this year. We've got industry giants like GM, Kia, Nissan, and Honda reporting robust new vehicle sales in the second quarter. And guess what? The electric vehicle pioneers Tesla and Rivian also delivered more vehicles than expected. This is music to the ears of investors who've put their faith in the automotive sector. Now let's talk about some global moves. Moderna, the COVID vaccine champion, is making waves by developing drugs specifically for the Chinese market. This billion-dollar deal comes after their earlier failed attempt to enter China, all amidst rising tensions between the US and China. Holders of Moderna stock, ticker symbol mRNA, rejoice. This could be a significant breakthrough. And here's an interesting twist. The renowned Cathie of ARK Investment Management has been selling off some Nvidia and Tesla stock. But don't worry, she's not abandoning ship. Instead, she might be using those profits to dive into other stocks in this exciting economic climate. So stay tuned and keep an eye out to see what she decides to buy up next. Speaking of Tesla, they've pledged to maintain fair competition and avoid abnormal pricing in the world's biggest EV market, China. That's a positive move, and it has caught the attention of Bank of America. They just raised their price target on Tesla stock from $225 to $300, all while maintaining a neutral rating. So the future of this electric vehicle company is bright. But hold on, Tesla is also facing some regulatory scrutiny. US automobile safety regulators are focusing on changes Tesla made to its autopilot system. They want details on how it ensures driver attention and how it detects and responds to objects. This investigation is part of a larger probe into incidents where Teslas operating on autopilot have collided with emergency vehicles on highways. And now let's wrap it up with a quick list of the best stocks to buy right now, according to the experts and professionals. Get ready to take notes. Visa, Amazon, Johnson & Johnson, Alphabet, Nvidia, Berkshire Hathaway, Microsoft, Apple, Meta Platforms, and of course Tesla stock are the best stocks to buy right now. Also, Morgan Stanley just boosted its price target on the club's star player, Microsoft, MSFT, from $335 to a whopping $415 per share. And that's not all. They've also maintained their overweight buy equivalent rating. These analysts believe that Microsoft is in the perfect position to rake in the big bucks from generative artificial intelligence. But hold on, the excitement doesn't stop there. KeyBank has also joined the party by raising its price target on another market player, Meta Platforms. They've bumped it up from $280 to a jaw-dropping $335 per share, while maintaining their overweight rating. Now, let's switch gears to General Electric, GE. Brace yourselves because Bank of America has just given it a price target boost from $108 to an impressive $120 per share. And guess what? They've also maintained their buy rating. What's the driving force behind this surge, you may ask? Well, it's because GE's free cash flow is off the charts. But wait, there's more to this thrilling financial roller coaster. Digital World acquisition, ticker symbol DWAC, has sent shockwaves through the market. Their share price skyrocketed by a mind-blowing 17% on Wednesday. It turns out they've reached a potential settlement with a US regulator. And the cherry on top? Digital World acquisition is aiming to become the corporate vehicle for none other than former President Donald Trump's Trump Media and Technology Group, also known as TMTG. In a regulatory filing, Digital World Acquisition spilled the beans, revealing that they've reached an agreement in principle with the SEC's Division of Enforcement. The SEC had been investigating certain statements, agreements, and timing related to their initial public offering. This investigation is crucial because it's tied to the highly anticipated merger between Digital World Acquisition and TMTG. The SEC wants to ensure everything is legal before things proceed further. But here's the juicy part. The SEC's Enforcement Division has accepted the agreement in principle, pending full approval from the regulator. If all goes well, the SEC will enter a cease and desist order stating that Digital World Acquisition violated several provisions of U.S. anti-fraud law. To make amends, the company will revise their documentation and pay a hefty civil penalty of $18 million once they merge with TMTG or any other entity. So in the end, it looks like this merger will go through, which is great news for DWAC stockholders. And that wraps up our wild ride through the latest financial updates. Remember to buckle up and stay tuned for more thrilling news that's sure to keep our adrenaline pumping. Happy investing, and may your portfolios reach new heights.